Hey guys, this is the market update. What on earth just happened with Bitcoin and crypto? Over $1 billion liquidated in a very short period of time. What is this candle telling us about potential news and events coming? Where is the liquidity right now in terms of, what's happening with the markets? How is liquidity affecting this? And what is the grayscale versus SEC decision going to be? Is this candle a foreshadowing of that decision? We'll have a look at that in this video. Let's have a look at Bitcoin liquidations though. You can see Bitcoin price at the top. We had this liquidation here, this one candle. This is actually a bigger liquidation in a shorter period of time than the FTX liquidations that occurred around this candle here. So you saw the FTX liquidations. This was over a kind of 2 or 3 period session. This happened all within one candle right here. So August, low, very, very, very low volatility and low liquidity that's happening right now in the market. And so we've just seen a bunch of leveraged longs trying to trade this ETF news. And obviously it just happened that those liquidations started coming in and the whole thing's, collapsed. So all of that leverage sucked out. The whole thing's been reset and now we're at a price. Now, what's interesting here is that I was looking for a dip here, if you watch previous videos, to say if we get some FUD around the ETF applications, which did come with the delay when the SEC delayed that ARK Invest application, but we didn't really get any FUD around that. We kind of traded sideways and then it's just all come within one session. I was looking maybe at 25, around this level, around this support zone to pick up some. This wick just happened all within this few hour period. And, I haven't been able to trade it. It's now gone from this 24,000 where it hit. It's now recovered all the way up to 26. Now, what we might get is some, selling off in the next trading sessions. This 25 level, or it's really 24,600 to 25,000. This support level is now the level where you just want to see that hold. If it doesn't hold, then it's just going to be fairly weak. But we now have a top and bottom for a consolidation range. This right here, so 30, 25 to 30 seems to be a sideways consolidation. We can now bid adieu to this uptrend. This has been an uptrend for almost 9 months at this point. Around 31, 32 weeks of a very strong uptrend. But we now bid adieu because it is not an uptrend anymore for that. So we're now looking at 25 for this level to hold. And let's see where the liquidity is to actually drive trade for BTC, because things are heating up in the macro a lot, and that's really going to determine where we go. If you're a trader though, check out Bybit. Deposit bonus in description. You can get up to 30K if you make a deposit and trade. Check the details via the link down in the description. So let's have a look at global liquidity, because crypto is determined by this more than most things, in my opinion. Not the only thing, but a very big factor. Now, we've seen Bitcoin have a huge dump, but then recover. ETH has done that as well. Taking a look at the bigger picture, these assets have recovered significantly from their own cyclical downtrends within their own markets. But the macro, of course, just weighs on things. We have recovered from these lows significantly. We're still 70, 80% up from the lows in, many assets. ETH, up 67% from the 1,000 low here. Bitcoin's still up a lot. Yes, a candle is a big move, but in the big scheme of things, we're still actually trending up for the time being. Obviously, something to watch out for. Maybe a sideways or a kind of weak movement until the next phase. In terms of liquidity, why this is important is because I believe we're coming to the end of the rate hiking cycle. And this is where things get interesting, because we've had 12 months or more of the Fed saying rates are going higher. We really mean it. And the market saying, yeah, right, whatever. You can't get the rates there. But now things are flipping where rates are going higher, even maybe though the Fed doesn't want that to happen. And so that's where you get these interesting flips. The reason is weakness elsewhere, huge weakness in China, and now going to want to support their currency. How do they support their currency? They sell liquid assets. The liquid assets they hold are US Treasuries. US Treasuries getting sold by China to support their own currency. You have the Japanese who are now not buying as many treasuries because rates have gone up in their country a little bit. So now you have far fewer buyers of treasuries potentially. You now have the US government who is running huge fiscal deficits. So they literally can't afford to pay for what they've promised to pay for. having to dole out all of this new debt onto the market, where there are now not only not more sellers than before, buyers than before, but now there are potentially sellers along with the government as well. This pushes rates higher, and this is where you may get issues. What we can see here is global net liquidity and global liquidity, which splits east and west. So blue is west and east is the red here. Now, what's interesting is despite some weakness in China, not a lot of stimulus so far, although that may be changing. Maybe they're looking to support the currency a bit. If they were going to do that, they would be selling US treasuries. Lots of sellers of US treasuries, including the US government, means that US treasuries are going to go down in price on the longer end now, because that's where the US is issuing a lot of their debt as of right now. So what we're seeing, if you can see on the right hand side, US 10 years, 4.2 now. This is a almost a flat curve at this point, a yield curve, right? So we had US 10 year way below what the 1 year was yielding because the Fed was in the market trying to get rates higher. Now you're seeing longer end kind of blow out a little bit. This is where central banks get scared and they say, well, we're not in control of interest rates anymore. This is a scary scenario. So what we're seeing is liquidity drop off a lot. That's not good for risk assets. You're seeing a lot of sales of assets. That's not good for risk assets like BTC, right? When yields are going up on, US treasuries, it's not good for BTC. It's not good for stocks. So let's have a look at what's happening here. This is the US 10-year yield. And the last time it was up here, we had the banking crisis in the States. Not a good time. Now, we're not going to have that again because the government has already got the BTFP in there, which has over $1 trillion of liquidity for the US domestic banks, which basically means whatever they hold, they can just sell it back to the government at par. So if they bought something at 99.25 during the pandemic, now it's worth 96, they've lost hundreds of millions of dollars, doesn't matter, they can just go and sell it back to the government at 100. So that doesn't matter for them. So we're not going to have that crisis again, but things are going to just start popping off like, whack-a-mole, right? These rates are going to cause a lot of pain in different sectors of the market. And so we had that once here, and maybe we have something else if we grind higher again. This is where central banks start to get scared. And this is where you may see in the coming weeks some new segments or some pieces that just come up in the media that try to lay fears or try and, talk markets down from what is happening here. But this is a potential shift in the macroeconomic framework. So important to keep an eye on. And of course, risk assets they're not going to do well in this environment. Risk assets like easy markets and everything like that. So that's just how it's playing out. But last time we got this, we saw some big intervention from the Fed. Maybe we see that in the coming weeks as well, just to calm nerves a little bit. So there is no new money in crypto right now. And that's what you need to push towards new highs. Fresh capital coming in, accumulating. And to be fair, the US administration did win that battle when they shut down the crypto banks, fair play to them, but they will not win the war because of the rule of law and how things take place. So firstly, ETH futures ETFs have been now approved by the SEC. This is good news. And this is obviously a roadmap that we can see in place now. Bitcoin ETFs got approved before, futures ETFs by the SEC, still no spot ETFs. It's clear that this is the marching path though, right? So you get the futures ETF first. Everyone sees how it works, sees how it trades. Everyone complains that it's not low cost enough and it doesn't track the underlying price enough. And then eventually the spot ETF comes. Now, whether that comes, it won't come this year in my opinion. Maybe it comes next year. If it doesn't come next year, you do have to wait for Biden to get removed from office. His administration specifically does not want anything to do with crypto. What we're seeing is the SEC just can't pretend to be regulating anymore by just selling everything down the river. So ETH ETFs approved, Bitcoin ETFs approved from the SEC. This is the futures side. And now you have all of these big institutions going on the spot side as well. It's been a nice liquidation candle, this one, but no investors getting puffed out of their assets 8 months before a Bitcoin halving, especially when Bitcoin and ETH are being carved out as these large, liquid, investable assets by the world's largest financial institutions. So good try on this one, but largely irrelevant in the big scheme of things. 8 months before a halving. If you are a trader, check out the deposit bonus to buy a bit up to 30k. I'll leave the link down in the description. The crypto investor course I'll link down there as well. It has all of my latest updates with my investment strategy throughout the next Bitcoin halving as well. You can check that out by the link below. I'm James of Money ZG. Cheers for watching, and I'll see you in the next one.